How's everyone doing? Most of our followers are traders, specifically FX traders, Forex, foreign exchange. They ruin the word even because it's the biggest business on the planet, but you have a lot of idiots there. You think of the biggest business, a lot of sophisticated people get attracted. Unfortunately, you have the biggest business in the world, trillions a day, but you have a lot of idiots attracted to this. Okay, but let's help them out and lessen the idiots out there. And obviously improve our BFI traders who have been with us for many, many years trading. Hopefully, whether it's one pair, but learning on one instrument, pair, currency pair, or if they've mastered an edge, a system, which we're going to talk about today, then maybe they can go on multiple pairs. But that's up to them. Most traders I know making a killing are on one pair. They are really in tune with it. That's their buddy. They squeeze that. That's their friend. Every week, yeah, some good weeks, some bad. But they focus on getting something out of that one instrument. Okay, so here's the topic of this video, which is, does the perfect trade exist? And obviously, there's always depth to what we say. For example, this word, and the smart ones know which word that we're going to pick out. Even though they're all important, because a trade, well, what is a trade, as we're going to see now. But I'm going to act like I'm talking to a newbie, an absolutely just zero skill. So imagine they copy this. You don't need to be smart and fully understand this to copy it. Anybody can copy it. Okay, but unfortunately the emotions come in and you're in some drawdown, but you took the signal from some guy that you're not even sure about. You want to die with your own sword, as they say in this trading game. Does the perfect trade exist? Unfortunately, no, it does not. But you don't need a perfect trade, okay? You need a trade that works, which is what we're going to talk about. I'm going to keep it real simple for everyone. But let's look at a trade, a setup, and see how sometimes things are not perfect. Now, what do I mean by perfect? Perfect is, well, it's tough to describe, but it's when you have so many what they call confluences, confirmations, that are all pointing to a certain thing happening maybe. You understand that so far, hopefully? Now, there's many confirmations. Some out there, the real weird ones, they look for an astronomical confirmation. I need the stars to align in some way, or some moon phase. I don't do it, and we're not going to get into it, but you have to understand that some even, and for their trade, which is they want to buy or sell something, they're looking as, should I do that? To trade, should I execute the trade? It's a big deal in the trading game. In the manual trading game, to be specific, because we're manual traders. This is not a robot. They could, if they understand it deeply, they could obviously go and develop their robots, bots that trade their system automatically. But for now, we're describing manual trading and the confirmations of a trade. The first one is area. Obviously, we want to be at a specific area. Look at here where the price was in this area. The candles were in that area. and versus now they're in this area. So where the area it is, of course, that's number one. Number one. Remember, all of these, remember, to have a, there's no such thing as a perfect trade, but you want to have as many confirmations as you can see. You don't want to force or imagine any, okay? But of course, you want the trade to be in the right area, in the right spot. We're going to explain all this through one setup. And you're even, maybe they'll see a perfect trade in their eyes, but all the trades are different flavors, as any trader knows. But we're going to look at a specific trade and see how it was perfect and how it was imperfect. But you can make money consistently with imperfect. You just won't, it will never be all perfect. It will, it's going to be tough, obviously, for them. For the, we have to mention it, for the analysis paralysis crew. We like to call them those people who, you know, there's a lot of ways you can explain this, but this too much analysis may paralyze the action. That's not what we are chasing here. Now the second one is not only it's at the right area, okay, but a signal. What is a signal? We're not even going to get into that. I'm just mentioning confirmations as an extra bonus for the watchers and the viewers here, as a welcome back party to YouTube. But we want a signal. Now, there's a lot of signals. Obviously, we tell them a valid macro zone and a valid micro signal prints. It's basically the BFI edge in simple terms is a valid micro signal, maybe a 15-minute signal that prints out a valid macro zone at a 4-hour range area, or a 4-hour engulfing that prints at a weekly range. But you need a valid micro signal and a valid macro zone. That's for the newbies here who have no idea what this BFI edge is. You know, and obviously they're going to have to study that, as we're going to see now. Which area? Well, areas where somebody bought a bunch. Okay, I don't really care about the candles. I care about, I got a huge arrow that came from that origin. And I don't care if the arrow is pointing down and it's red. But there's an A to B strong move, okay, that originated from that. We have to obviously validate the zone through a valid footprint, something like this. Multiple candles up, multiple down. That creates a U-turn. But if that were to break, which we call a footprint, then we have to take the origin seriously. But we'll get to that. Explaining the setup that is about to happen, which was March 11th, and not from 700 years ago, but these happen. Well, understand what this setup entailed and the confirmations, and then you decide for yourself what kind of trades will you take. Just a trade, but what's the quality of your trades? The quality of the trade depends on the confirmations of it, which we'll get into now. So we can have obviously a bullish engulfing. It could engulf a bearish pin bar. It could even be, this is the thing, I'm saying this because they sometimes don't understand what a signal is. This is a confirmation for the trades. If you have these, you have a highly, highly accurate system. They don't even understand how powerful that is. Okay, it doesn't really matter how the candles look. And some of them base their signal on the color of the candle. You know, I wish the color mattered for certain pin bars, so we'll just mention that. The color, if it's green or black, or whatever pink or yellow colors that you use, hopefully the charts here for our viewers and our YouTube subscribers and whoever it is out there, they have a clean chart like this, what we have in front of us. So let us finish off the confirmations, and then we'll show one simple trade setup, and they'll have a good idea. So we have the right area. We have the perfect. Now that's a big word, but we're going to use it for the title of the video. Perfect, the perfect trade. It doesn't exist, but let's say it's in the perfect area. You get the perfect signal. Another confirmation you can have is volume. Now, what do we mean volume? Obviously, institutional volume, ladies and gentlemen, for the YouTube kids out there. Which is what you're seeing here. They'll pull up the image for you. And this image is 6A, which is Australian dollar futures at an institutional exchange regulated in the US, the CME. Okay, but volume, back here, volume from those and watching and reading the delta of the volume, the difference. Because what else matters besides the difference between the buying and the selling? Not the buyers and sellers, because only a few buyers and sellers do all the buying and selling, but about the volume of the buying and selling. And what's more, because obviously it's going that direction, whichever stack of orders is higher, whether it's buy or sell. But you would like to have also a volume order flow confirmation. Back to 6A here. This is a cum delta confirmation, which is prices dropping into an increasing cumulative delta. As you can see, the buildup in the net volume for each candle is adding up cumulatively, candle by candle. And you see prices dropping, but the buildup of buy OFV, buy order flow volume, is increasing. And that's just what we call a volume confirmation. Now, a time confirmation, not many notice this or understand it. But when is all this happening? Do you understand that that's a confirmation if all of this maybe tends to happen? Or what if it happened during what we call a liquidity session, which is when both New York and London banksters are open? Obviously, moves happen outside of that, but know when to waste your time on a chart, because as they know, less is more. But the more that you trade, and let's type it out for them, the more that you're exposed. By definition, if you're always in there, you're always exposed. I don't care if you have a stop loss. You've probably never seen a 20 pip jump over your stop, which is, it could happen during these news events, which are now all the time, because now the CPI, they care about it more because of a higher inflation. They care now about more about the CPI numbers. But basically any number, ABC, CPI, NFP, XYZ, it doesn't matter. It is called, as they know, because they're all smart, they're BFI traders here. It's just a reason. Now, obviously, the CFD brokers, offshore CFD crew, they can use it in their own way as well. They use it however they want by widening the spread on you or jumping this or that. The rules don't matter. There are no rules, but the rules don't really matter during one of this. So it wouldn't hurt. Now, technically, if you're always trading that, you always have a time confirmation. Isn't that amazing for them? But if you had certain confirmations, and really these two are enough before I get rid of it. If you have it at the right zone, valid zone, there actually was a valid BFI footprint that originated from that zone, and now it's the first time back, as we're going to see now in this simple trade. Which is, the trade is real simple process and easy, and it's not complicated. It's rather simple, okay, but they don't make it easy on themselves, unfortunately. Okay, but Mr. ABC, CPI, NFP, all these XYZ, all these news events are liquidity injections, as they know, and you have to be obviously aware of that. And really, if they've noticed, not much news events are announced within this. It's either before or after. Most of the numbers are announced an hour before New York opens. So this is not a bad session. They should all have a session, but this is not about what they should have. This is about explaining the one simple trade. Let's look at here, which is, we're going to draw a range. I have to remember that there's a newbie watching, and this video is for you, whoever you are, to the newbie. We have to draw the range. Now, obviously, we know that from the origin was a valid footprint. For the YouTube newbies, they have no idea, but you look for something like that, kids, all right? And we draw a certain range. How do we draw it? Well, from the high to a base, or from the low to a base for the buy side. Now you could, from the low to the base of that candle. Now, obviously, this is not the low, which is why we turn this off sometimes. This is not really the low. This is not how we do it, unfortunately. They can think about this however they like, okay, but we're going to explain it in the real BFI way, the simple way, not the way that they took and they cluttered up over the years, because we shared this years ago, but some people seem to do it their own style. That's fine, but we're going to stick to the original style now, which is this, from the low to the base, but this has a lower low to the left. Okay, so think about this. BFIs will enter, these banksters, they, by definition, since they control the majority of the volume, by definition, this is real powerful stuff if they understand the power of them, but they essentially create the lows. If there is something lower, in this case, if there's a low created, if there's something lower than that, in our world, we believe they are not in yet. Okay, by definition, if they have the highest lot size, they can't be in. Well, there is some sophisticated strategies they do, but they can't be in majority of it here and then have it go cheaper. It doesn't make sense. That just means then they weren't in here. And essentially it means they haven't closed their longs yet. Because when BFIs enter, the whole market shifts. If it doesn't, this is another one up here somewhere. But we won't get into that. We're going to show them one example of it. But really a full example so the newbie kind of understands like how this trade came up. Now look at the timing also. It's not 700 of them every day. This is, obviously you have to understand your strategy, and this BFI strategy on this time frame and how often it happens. Let's mention it real quick. Intraday could be 1 to 3 a day even. Well, we're going to delete that. We have the intraday, which could be 1 to 3 moves a week. It could be a swing, which is maybe 1 to 3 moves a month. And you could even have the scalpers who have 1 to 3 a day, but this is a rough guideline. But they have to understand how many opportunities typically does their edge give them, so they know when they're doing too much or too little, or so they know obviously how to anticipate. Okay, so we use the low to the base of that candle that created the low. Now the smart ones are asking, well, isn't this valid? And this is the first retest. Well, let's look at it like this, because sometimes they have to buy some and then buy more before you get the major impulsive move. Now, how do we know the major impulsive move? This is real simple. They bought some here, okay, and obviously they bought more, but we're looking at how much more. We don't have exact numbers and volume, so that's why we use these candles. But as a rule of thumb, sometimes there's exceptions obviously to this, but if you see a footprint, look at this, this is 1, 2, 3, this is all green essentially. That is not an impulsive move, as they know. It has an impulsive move like that and then followed by some kind of basing pattern, retracing, ranging, reloading. I don't care what they say or what they call it. And then there's another very strong impulsive move. Essentially this. Okay, it doesn't always look perfectly like that. Okay, it's not supposed to. Perfect trade, like I said in the beginning, it doesn't exist. But this is what I would call the validation move. Okay, some people will use that and say, okay, this is a validation, and then now it's the first retest. That's, well, not really too smart if you're just going to stick to that, because sometimes they buy some and pull back, they buy some more, and you don't want to use the whole. This is actually the true origin. You don't want to call this a first retest. That's a major point here to mention. I know they're going to ask, but we answered it. So we would consider this move validating the origin, and we draw it accordingly, like that. Now, imagine there are some traders who probably have blown 17 accounts buying that. And it's not even in the first confirmation, the right area, the right spot. They can't even look at that. They can't even, it's very hard to have a perfect trade, but even anything close to it. But if you can't even wait till it comes to the right area, then it's going to be tough. It's going to be very tough. And hopefully there's a lot of mercy on your soul shown or given. Because as you can see from this, you get some floating and it's gone. Remember, you get some floating and it's gone. You get some. This is not a fun journey if that's the equity curve. Whatever, however many times it goes on. Okay, so this is not execution time yet. So, but they know where the origin. So let's zoom in here. Now we're going to go through this rather quickly because as they know it's back testing, but I prefer that they forward test and learn. But they're going to have to, well, we have to do this to explain a perfect setup. Now, let's take it to a classic point. Look at this point here, which is it tapped it. Yes, sometimes it taps it and never comes back. Extremely rare, or who knows how rare, but let me mention something, which is they don't understand sometimes. You viewers here are extremely smart, you do, but others, they don't understand of what this consistency means. I may even have to say usually, but we're not in the markets to trade what rarely happens. They can catch a trade and catch a top, catch a bottom, and who knows when they're going to catch another one, and who knows if they'll even be able to maintain their capital until that next one comes along, because by definition, if it's rare, you have to try often for it to catch it. Okay, because you never really know when it could happen, and you're trying it out for yourself. The smarter way, which what everyone here does, which is they just have an edge, a system where they have obviously the unfair advantage. That's when they click and we set the confirmations at the right area, the right signal prints at the right area, the right time, the right volume picture. A lot of confirmations you can have. You can even get by with a couple. It's very tough to get by with only one. It's in the right area. You need more than that. Even some scalpers, they can go off of one confirmation. What do I mean one confirmation? That's all you have is a signal. And it could even be something like this where you have on some random time frame a few pin bars. And you just decide to use that as a trade. You get in there with a stop below that, but this is not what we're talking about. You don't just take any signal anywhere. We want confirmations as they're going to see in this one. Look at this now. The tap will get a lot of them. Okay, those who don't want an unfair advantage. Well, it could do that. More likely to do this. If you're managing risk and you're smart, you can even attempt that, but we're not even going to discuss it. You could attempt that with the understanding that it could go typically this situation here. They all know the midpoint of the range, some limits there. Some entry methods of our traders have limits there. They could have live alerted to get active live. They could wait for, this is a 4-hour time frame. They could wait, they could get a 4-hour signal to print there. Some could be looking for 15-minute confirmations at this 50% point. There's a lot of ways to get it. We're not even going to discuss that. But somehow they managed to implement the right entry tool. And depending on the entry tool, obviously that gives us your position size. We're not going to get into that really, but we are going to get where the proper stop loss placement, target, okay, one trade, and even how late traders. Here's a good point to make. Are you late? Or are you pyramiding and taking advantage of your profits that are floating? And no, you're not late. You got in at the origin and you're building up your position maybe at the right time. Or you could just be late. You just woke up now, for example, on a pullback and then another impulsive move. Some people just entered their initial position and they just took this. Okay, don't judge, trade. That's a good slogan for them. Don't judge, trade. But limit orders obviously below the range. In this case, you had a beautiful 80 level. We like the 80, the 50, especially 55, 20, 0, 80, and so on, which we call let's try to squeeze in as much as we can in this video for them. As we do it once a year, they don't understand. But we're going to do it every week for them. Hopefully, maybe, as we mentioned today. For those looking for the 15-minute picture, now remember, some trades are great, some are pretty lame. Everything has its quality, but this is a perfect picture to see on the micro. This is not has anything to do with a zone or a footprint or any range or any, but on the micro you have to watch out within all this that you could see a little buying and then it pulls back to that origin and then a little who knows, but little because it's a little time frame, and then some more buying, which is this, and a return to the range followed by this breakage of it. Remember that sign. It could be your perfect trade or not, but you actually have a 15-minute. This is what did we call money on the floor, that signal, because you have this printing, and let's say it's at the right time, but it's at the right time in the right place within your 4-hour range, which you definitely should have a good split of the top half and the bottom half, but below the 50%, which is the more common setup. This is really a perfect one, or as close to perfect as you can get. That printed around this 50, around the midpoint. Okay, and you had a good sign. Remember, even if you're not even in yet, this is a good picture to see. in terms of those micro 15-minute lovers. Okay, but to see any real potential move form, you're going to have to watch it on. Now, is anyone surprised? And it's really important that they see this. Is anyone surprised really that before the biggest green, it'll be the biggest red? Well, not the biggest red, but there's almost a liquidity run before the move. I mean, it's really tough to get this without that. It's tough to get this without that. That triggers those, just those extra bit of orders below the low. This makes it a little bit more liquid in the world, believe it or not. And here is another thing that they seem to have big trouble with, okay, which is maybe even you did all this perfect, okay, so we have to talk about this last piece, which is, could even put a question mark for those who don't even want to set it, which is not crazy either. You always want to get paid somewhere, but they're focused on looking to buy here and getting executed there and get in position there. And then maybe the move develops. Okay, we'll see where we can target. But let's look at this target right here, right now, for any newbie. Now, we're going to use this volume here just to get this. And this is the volume on the swing point, on the high, on this, because whereas a smart target is potentially where maybe they may sell. Why would you close your longs if they aren't selling or if they're still buying? If you felt they were still buying, you wouldn't close it there, because if you wanted to close it, then you'd have to close in reverse, just like they do to sell. But they're not, they're still buying. Obviously a wipeout setup, but this is not a bad place. At the POC, which we call the point of control, the heaviest part of that U-turn, that would not be. And sometimes you could also to the nearest algorithmic level. Okay, this is what we call target zero. These are not targets, unfortunately, for these weirdos who do things like that, which is essentially using the move is going down. Well, the micro move, because price is fractal. But they'll be using, you know, these very small swing points within a move instead of taking the origin, the recent one. Now, this is another target. This is, I'm not saying we set targets like this, okay? But for a newbie, that wouldn't be crazy, is to target the heaviest point of that cluster and the heaviest point of that cluster, because, well, you want to take advantage of what usually happens, not what rarely happens. And so you set targets like this. That's just one way to set exactly a target. Now, think about this. If you can't get your confirmations, that's the hard part, is getting your confirmations and letting it play out according to, obviously, the analysis that you made. But that's the hard part, is all waiting for those confirmations, executing on them, deciding on a reasonable, logical, probable, reasonable is the key word there, target, and it either hits that or it doesn't, well, then it's going to be real tough to do any of this. Now we're going to actually let the trade play out for them and talk about the late kids, just some late traders. Sometimes you see a strong move like this, and remember, we left the range, so we have to use your good old Fibonacci tool. We left the range. It's likely gonna have maybe footprints and maybe pull back to the midpoint of it. Footprint, maybe it pulls back to the midpoint of, but you're gonna have to use your retracement tool instead of hoping for this to happen and it comes back to it again to the origin. That'll be real tricky. But if you see the price retracing, and we like to use the maybe 20, 30, 40, 50% to see if the move is retracing. So, and these are not the moves that you want to use, but we're just going to mention it for some are more advanced. They may even they may understand that it hit the deeper part of the range. They may understand that BFIs maybe are positioned. They may understand that the move is about to happen or is happening. And they may want to take advantage right when they see this. This was more of a pullback to the 50, 61.8, the famous range that we like, before another BOS, they call it, break of structure, which is just another footprint. Now, obviously, our ADB trader who took it A to B and his target is hit, congratulations. That's actually a perfect trade for them. Now, for some, they could be trailing. Okay, but let's assume that they're still in and they want to keep pyramiding the move or try to take advantage of every opportunity that arises. The trend is your friend until it bends, as they say. When you have something like this, which is that footprint has completed in terms of it made a break and now it's pulling back to somewhere, maybe the midpoint of that ADB move. This is when you would consider these types of entries. So even if you missed you had your confirmation, don't ask me why you didn't click there. Well, that's your job, is to be ready for that. Okay. Area, signal, volume. How valuable do you want the signal to be? And now we're going to play this out so they see where it is. But here it is today. Now, at the timing of this video, congratulations to those who took it A to B. Remember, everyone takes it in different ways. Some people can't trail it because this is a perfect trailing area, maybe at the nearest algorithmic level, 50. For those who maybe you're going off the monthly, they're saying it's still pushing higher. It could go to the deeper half of a monthly sell range. But for those who use this pullback entry, or maybe those who just entered and realized the opportunity here, and missed it here, every trader is in their own position if this is their instrument. Now, as it goes further, you just want to watch out. It's not every single footprint you want to take a 50% pullback of it, but these specific ones that we did a retracement on here, such as this, the footprints that originate from the range, that's a definitely solid. Okay, now executing all of this, that's the hard part. Those targeting the next cluster are in, and it either gets there or it doesn't. Maybe they have a process, a system where they maybe wait for a pullback. Maybe they pyramid or they don't. I don't really care. And as soon as it breaks that structure, they have a beautiful place to trail now and see whether they close half in trail, whether they don't close anything in trail. Personal things we don't get into in a simple video like this. So what do you guys think? The perfect trade exists or not?